I know that my friend Jim Cramer has been interviewing you for years, and he has called you maybe the best sort of retail REIT CEO in America.
Brian is a very nice man. Very nice man.
Well, but I think I live near one of your properties. It, unlike many other strip malls that I see in New Jersey, is 100% full. How are you 100% full when in Manhattan, walk down 46th Street and one out of every 3 buildings is empty?
Those are two very different.
Or New Jersey. How about this? Go to a random strip mall in New Jersey, a lot of retail vacancies.
Well, you know, when you start talking about random this and random that, you're effectively saying commodity. Commodity rises and falls with whatever's going on in the economy, and we certainly have some headwinds ahead of us, along with a bunch of tailwinds, which I'd love to talk about. But location really matters, and the demographics of the people around that location. Do they have money to spend? Are there a lot of them? And importantly, are there barriers to entry? All of those things have to go into the consideration of the real estate that you own.
But I heard for years, Don, that retail is dead. Just buy everything online. Fill your house up with cardboard boxes and Amazon trucks.
So, Brian, the best thing that happened coming out of COVID was the realization from consumers that we're social people. And the single best thing, and it came out, after 2017, 18, 19 of no more retail, no more, bricks and mortar, and it's just not true. And so that giant tailwind continues, and effectively it's really pushing through and helping us and other open air.
But a lot of it depends. I got to imagine depends on where. If you're in Warren, Ohio, I mean things. And Warren, I race cars there. It's a great town, but it's economically depressed. Versus Annapolis, Maryland, or Summit, New Jersey, wherever it is, you got to be in the right spots.
You got to be in the right spots. And, it's hard for investors because when investors think, they want to paint a big, broad brush as to the companies that they're looking at, the industries they're in. The bottom line, real estate is local. And it really does matter where you are, and you need those 3 characteristics.
A lot of tough news lately. Everyone's accusing me of being all negative. You said you had tailwinds.
Yep.
I want to hear some good. Give us the Sully side up. Good news.
Sure. By the way, okay, we've been around since 1962. We have raised our dividend every year since 1967. That's 55 years. There isn't another REIT in America that can say that. You know how you do that? And by the way, think about interest rates in the 70s. Think about wars. Think about COVID, all of which.
There were some OPEC fights in the 70s, high gas prices.
Crazy.
Right? I mean, all the embargo, higher rates, inflation.
How are we still able to raise those dividends throughout all of that, including COVID? Real estate's a local business, man. And when it comes down to setting up the right balance sheet, we're the port in the storm here. That's at least the way I'd like to ask your viewers to consider us. In fact, consider all of the shopping center REITs that way. But I think we're a little bit better. I just do.
So you can get through these higher rates.
There's no question we can. The balance sheet has to be strong. You can't now say, oh, my gosh, we're going to head into some tough times, and now we should do something with the balance sheet. Now we should do. Too late. You have to have been set up all the way. This is a long-term business. I'd love you to think of it as port in the storm at these times going forward.